January 22nd, 22. Nice round number. Got a lot to go over. We'll go over why you don't want to listen to somebody in the market that made 7% last year. A headline. ETFs. We'll go over a couple of new ones now that Gary Gensler has gone from the SEC. We'll go over the Momentum ETF. And buckle up for Volatility and Trump and some good ETFs for Volatility that Seeking Alpha has. We'll go over the Dow, some of the big movers, and we'll use Finviz to try and sort those out so I can show you how to use Finviz. The biggest movers of the day, NVIDIA is breaking out. Let's talk about it. Is it going to hold over that 140? And Project Starlight is going to be huge. The AI trade gets a huge bump from Project Starlight. 6 AI stocks for 2025 from Steve Kress. To talk energy stocks because you can't do AI without energy. Space stocks went crazy yesterday because Trump, again, volatility. He just mentioned Mars. Tesla got a new price target. Then we'll go over earnings because Netflix killed it yesterday. Absolutely killed it yesterday. United Airlines killed it yesterday. GE Vernova had earnings this morning, and Capital One Financial had earnings this morning. And looking forward to next week, what do we see with the technology sector, and what are the top quant stocks you can do in there? And Butch wants to know about AMD. So let's start this off by looking at the Qs. Here's the Qs. I mean, we've talked about it. You're trading at about 526 now, 529 pre-market. You're up about 1%. The top here is about 540. So getting in at 529, you do have the top there at 540. The MACD is down below the oscillator. We talked about how it's oversold, how it needed a little bump maybe in the short term, and Trump was about to provide that bump because, again, we gave back everything we took away from the election. Everything you took away from the election. This is November 8th, where you see a nice little jump up here to 514. Guess where the algorithm got you in? 519. So it needed a little bump. But take a look at the weekly. The weekly doesn't need a bump. So expect volatility. Expect things to go down. I don't expect this one to stay at a higher level and just continue up. But with that said, earnings are providing a damn good platform. Okay? Now, who do you want to listen to on the internet? This is a perfect example. The headline, Greenlight Capital's David Einhorn, who is a legend, has his own hedge fund, billionaire investor, says the U.S. markets have reached Fartcoin stage. He is warning about the valuation of the market. He's warning about cryptocurrency being crazy. He's warning about Fartcoin being up and they're tradable 24/7. He likens it to an art painting and says art actually has value, but this stuff has no value. And what got me is the last line in this, okay? Greenlight Capital's funds returned 7.2% in 2024 compared to the S&P gain of 23.3%. So if you're investing with this douchebag who is warning you to try and get out of the market, who very well likely has shorts in the market when he says this stuff, you're going to make 7.2% when you could have just bought VOO and made 23%. Be careful the headline that you read. We're in a bull market, and you're in a bull market until you're not. So be careful. Understand that, yes, he is a billionaire investor. Yes, he made the right call many, many times, and he knows what he's doing. And Fartcoin is absolutely worthless, as is the Trump coin, as is the Melania coin, as is all those shit coins. And I am not putting down meme trading. But understand, you're not investing in those meme coins. It's not investing. It is simply trading. Okay? Now, with Gary Gensler out of the SEC, we know new ETFs are just going to start popping up. So Osprey just applied for these new ETFs: Trump, ETH, BTC, SOL, XRP, Bonk, and Doge. Guess what? They're going to get approved. In this SEC market, most likely these will get approved and they'll be out there. So new ETFs are coming. One ETF that I like is this momentum indicator. Okay, the momentum ETF, I should say. The momentum factor ETF is coming off a great 2024, but it's oversold. That's what this particular analyst puts up there. Now, if you look at the momentum indicator, momentum ETF, look at its holdings. Broadcom, JP Morgan, Walmart, it is all over the place. It's got 129 holdings. It's a good one. And the quant says it's a buy. Momentum, A+. Look at the momentum. 1 month, 5%. 6 months, 16%. The 1 year return, 35%. It beat the S&P. So if you go over there and you look at a chart of the momentum, look at that. Year to date, beating the S&P. 1 year, beating the S&P. 3 year, beating the S&P. You go to 5 years, it's not beating the S&P. So understand these things will change. The momentum indicator, momentum ETF is a good one. I like it. Look at the holdings, understand the expenses. It's not super, super expensive. It's a little bit higher. Like if you go to VOO, okay, VOO is the standard. Oh, let me look at VOO. I put in VII. VOO is the standard. And if you go and look at the expenses of VOO, it's 0.03. Now, MTUM, which is the momentum indicator, is 0.15. And you can go and look at the peers, and everybody has a momentum ETF. And you can look, the JP Morgan's is even cheaper. And if you go and look at the holdings of this one, it's got Broadcom, it's got Alphabet. It's a little bit different. So understand what you're getting into and what you're investing in. That's what I want to teach you. So Barclays says, buckle up for near-term volatility under Trump administration. And what do they give you? At the bottom of this article, they give you market tracking ETFs, including VOO, including RSP, which is the equal weight ETF for the S&P 500. And they include other volatility ETFs where you can trade the VIX, VXX, VIXY, VXZ. They include all of those. And they tell you why to expect volatility. And I have said many times before over the last few weeks that the VIX, okay, this one, it's at 1459. It wants, I think personally, it wants to be at 20. So you could buy one of those VIX ETFs, understand the expenses, but you could buy one. And I think you're going to see that one start to move up. Now, the Dow yesterday was crazy. We're going to use Finviz, and I'm going to show you, okay? Just go and look at the Dow, okay? And then you sort it by change. And this is Finviz. This is how you can look at yesterday, okay? It doesn't have historical, so the second the market opens, you're not going to see this. But look at 3M. 3M had earnings yesterday, okay? It was up 4%. The second was Nike. We talked about footwear and how I'm not a huge fan of Nike. I think it's making higher lows, but it's not a good stock. Caterpillar, that's a good stock, up 3%. United Healthcare, that one's dipped. Okay, Boeing, NVIDIA. I brought up 3M. 3M is let's see, where did 3M wind up in the Dow? It's the top. 3M is the top one, 4.16. And that was an earnings related one. CEG was up quite a bit. Where is CEG? Let's see. Did CEG slip? No, I guess that's it. That's in the S&P. So if you switch this to the S&P and we just look at the S&P, the top one, Vistra Energy, Oracle, PLD, NRG. Again, there's a lot of power related stuff here. Tractor Supply Company was up 5%. General Motors, which is an alpha pick, was up 5%. Moderna, SMCI, which is still in the S&P 500. Dollar General, all of that stuff. Understand what you're looking at, and you can do an energy sector. I mean, let's just look at the energy sector. Kinder Morgan, Vistra Energy is actually a utility. That's where it is. Look at NRG. Look at GE Vernova. It was up 3% yesterday. So we'll talk about that one a little bit. Again, Finviz, you should be using Finviz to try and use this scanner to find bullish stocks that you can look at. Now, the biggest movers of the day, I mean, there's no losers on this list, by the way. This article includes no losers. But let's just go over it because it's Netflix, up 15% earnings. It's United Airlines, earnings. It's Oracle, based on Trump announcement. Okay. And everything around AI, but Oracle was up. Interactive Broker, earnings. What's a common theme there? It's earnings. We're in earnings season. So if you want to go find out what's coming up with earnings and do some picks, it's Earnings Hub. Okay. For me, there's quite a few here that I'm interested in. None that I really have. NextEra Energy is a good one. Let's see with that one. That's in 2 days. 7.9 billion estimate, 53 cents estimate for earnings per share. What did they report last time? 7.57 billion. So slightly up. $1.03 earnings per share. They're estimated to make half that. If they even come close, again, you're in a market that is going to reward earnings. So let's look at NextEra Energy, NEE. Is this one a good one? Well, Wall Street says it's an $85 stock. It's 20% upside. There's 24 analysts that cover that. The quant says it's a buy. The only thing, two things that will stand out to here. The valuation, which is extended. Even the PEG ratio, extended. But their growth, that's a question. But they're doing very well on that. Momentum is the biggest one. It's down 15% in 3 months. NEE. Okay, you can pull up the virtual analyst report, and if any of those, Duke, Southern Company, Excelon, they're all competitors. You can check those out. Sector metrics, you can check out the valuation is somewhat high as indicated by price to sales. This is AI. It writes this for you every night. And this is why I like using Seeking Alpha. And Seeking Alpha, it was last January on or before 110. So it's a little dated, but it will be updated, before, probably on the earnings. Oh, yeah, the last virtual report was generated on or before 110. So you can take a look at this. They update a lot of these overnight using AI. And it's just a virtual analyst report. And say it's number 5 of 41. Say you don't necessarily like NEE. Well, check out Southern Company. Okay, Southern Company is a utility. This one, $90. That's a 6% upside. It's ranked number 4 out of 41 in utilities. Again, Seeking Alpha has such a good tool. You can get it 2 ways. Okay, you can get it in a bundle, which includes Alpha Picks. Okay, this is the bundle. You save $159. It's the second link on Linktree. And the bundle is what I would call the Gary bundle. Between this and Trendspider, this is your best tool. These are the tools that I use to manage my own portfolio, my own system. Okay, I use the 4-hour algorithm in Trendspider, but I constantly am going down the rabbit hole of Seeking Alpha and Alpha Picks. So here's Seeking Alpha Premium you just saw me use. Okay, that's the third link if you want it individually. You can get $30 off and a free 7-day trial. That's the very least. Go and import your portfolio on a free 7-day trial and go and read the virtual analyst reports to make sure you know what you're holding. Okay, that's the first one. The second part of this bundle, where you save $159 if you buy them together, is Alpha Picks. And Alpha Picks is a data-driven portfolio that alerts you on the 1st and the 15th of each month to buy, and you buy 1% of that. Or you can just use it as a stock picking tool. It covers multiple sectors. It's up 177% versus the S&P during that same time period is up 58%. And that's, again, on the link tree, it's the 4th link. The bundle is the 2nd link. Seeking Alpha Premium is the 3rd link. But you can get this bundle, and this is what I steer people towards, because you don't save $30 and $50. You save $159 off the bundle. And again, for me, Alpha Picks, it's a no-brainer. I tried picking these stocks for 8 months. I didn't beat the portfolio. I just bought into the entire portfolio. And so it was just a buy-in. And so that bundle is a great opportunity to get in. So if you want to do any of the research on any of these stocks that have earnings, because we've shown earnings drives stock price. Okay? AI Trade gets a big boost from Stargate Project. Have you heard of the Stargate Project? Because every freaking news channel is covering the Stargate Project. I will point out there are a ton of single stocks in here, but this is the whole universe. This is the whole universe of stocks. And even though Stargate it mentioned Oracle, and that's why it's up, but Stargate didn't mention NVIDIA. And that's up 3% because when you build data centers, you're going to have NVIDIA chips. It's going to drive up the price of NVIDIA chips. So that $500 billion that they're putting into data centers, guess who's going to be the number one beneficiary? Because again, you have to choose which platform you're going to do. Is it NVIDIA or is it AMD? Doesn't mean AMD is going to lose. Just means NVIDIA probably will get more because they will be able to drive the price of their chips up. And that's pricing power. You're seeing it with Netflix today. Netflix is the leading streamer. They are raising prices. They are raising prices in all their tiers. They will make more money. And again, we'll go into that one. But NVIDIA specifically, I put that line there at 140. It has not been able to hold it. We've been fluctuating. Okay. And let's talk. We talked about the Qs, how the MACD needed to reset in the short term, but it needed to reset in the long term. It reset in the short term. This one, short term, 4 hour, you can see it got you in today at 141. Okay, we're trading at 145. The difference is marginal. I mean, start entering a position. If you're buying $100,000 worth of NVIDIA, yeah, the difference is pretty significant. If you're buying $5,000 of NVIDIA, the difference between 141 and 145 is lunch. I mean, it might be a nice dinner. $4. $4 a share. If you can get this under 140, I'd say yes. We have to see if 140 provides the support. Right now, I'm seeing it. Right now, I'm seeing the hype move up. NVIDIA is not expensive. And again, when you have this AI trade gets a big boost from the Stargate project and NVIDIA is up 3%, Oracle's up 10%, SMR, which is power, is up 16% yesterday. VST, which is power, is up 8% yesterday. NRG, power, is up 1.4. Again, you want to be in these stocks. And if you look at the weekly on NVIDIA, look, the MACD has come down. The last time we saw the MACD at this level, you were trading at $90 a share. And sure, you went down to 76, but wouldn't you be happy at $90 a share? And I'm not saying NVIDIA will double. It can't. It just can't. The market cap will not allow it to because NVIDIA took over Apple as the largest market cap stock. It can't go from $3.37 trillion to $6 trillion this year. It can't. It just won't. But understand that Wall Street thinks that it's a $173 price stock. For me, stocks are all about risk and reward. And I'm okay taking the risk of it potentially moving down to 130 if I can see the 170s. Okay? Doesn't mean it's the best place in the market for your money, but for me, the risk reward makes sense. It's not stretched. The valuation on this one is not stretched. Even though you see the PE up here at 46, the PEG ratio at 1.22 seems like a good one. So again, look at this article, find out which ones you want to do. But remember, the top AI stocks for 2025. This is a list of the top AI stocks. They're gonna move as well. These are ones that do have the potential to actually double. They have the potential to actually. NVIDIA doesn't have the potential to actually double. Just because if it's market cap, it's just too big. Doesn't mean it's gonna fall. It just means it's too big. As long as they can put up the earnings, and everybody expects their earnings to be good. But they are coming off a record year. So remember, I'll talk about Tesla in a little bit. Tesla's coming off a kind of average year. So the comparisons to last year are going to be, hey, it was an average year. If we can get better, we're going to do better. NVIDIA is coming off a fantastic year. So their comparables are going to be tougher. Why not find out the top AI stocks? And like I said, do not fall prey to just missing out on the energy trade. Energy stocks had the largest return last week. Here's the top rated quant stocks in the energy sector. And if you're not into, buying just energy stocks, just go out and buy XLE. If you take a look on the 4-hour algorithm and we take a look at the spider sector, XLE, which I like buying spider sectors of areas that I'm not an expert in. Take a look at this. You can see that $93, which was providing resistance. Where'd that come from? We can see it right here. That $93 came off that previous high, and it's just moved sideways. We're getting, and Trump has declared an emergency. Energy. He seems to just be careful, because while Trump is saying, hey, we're going to pump more, understand what that does to energy. Okay, there are going to be utility companies that benefit from this. There are going to be, and the reason is because energy prices are going to come down. And so what does that do to energy stocks? It actually makes their earnings look worse. So be careful. I'm not a huge fan of this one. I'd rather buy into utilities. But if you're into energy stocks, my biggest energy stock right now is MPLX. And I've gone over this one on Spaces a bunch of times with Austin Hankwitz and other folks on Spaces. This is just one that I bought back in I bought it on a monthly candle. Okay? I said, look at this monthly. And I bought it back here in April 2020. I think my average purchase price like $8. I've added to it a couple of times. That was back then. I think my average purchase price now with reinvesting dividends is somewhere in the 20s or 30s. It's a significant gainer. Did it outpace the NVIDIA? No. But it provides a good 8% return, and it's a decent energy stock. So I have exposure to the sector. Do not give up on the sector. One thing that was nuts yesterday was space. Trump just said Mars. I mean, all he had to say was Mars. Rocket Lab up 30%. Mynarchic up 48%. Momentous up 24%. VSAT up 32%. Lunar, Intuitive Machines up 23%. I mean, the volatility is going to be crazy. Now, I saw the Uber CEO. Let me go over and look at Uber. I saw the Uber CEO this morning talk about, he said, and I think this is going to make news. I'm just not sure how much news it will make. He said autonomy is between now and 2 years from now. Autonomous driving. They have a deal with NVIDIA. Okay? I like it. Now, I like this stock to get up here to 82. I do own this one. The algorithm got you in here at 62. I like this one. The algorithm makes you 70%. Buying and holding makes you 139% over 24 months. I like this one to get back to this $80. Okay, Uber CEO said that. Now, what does Tesla? Tesla lands a new higher price target. Again, remember, Uber buys Teslas and they put them into their fleet, and they like the electric vehicles. In fact, when Teslas become self-driving, more than likely, Uber will be self-driving. They will just buy the Teslas and launch them. Okay? This Tesla stock, this got a new upgrade from Wedbush. They went from $515 to $550. Okay? If we look at Tesla, it's just I mean, the valuation is crazy. It hasn't made sense. I own Tesla through XLY, and I have a very small position in my Webull account. But I do like that. I like Tesla for this year. Do I think it's going to get back to its 488? Yep, I do. Because if you look at Wall Street says it's worth $313. That's 26% downside. But I think this one gets the pump of Elon. And I think you just see it trade sideways. And if we go and look at the chart on this one, you can trade it in the 4-hour algorithm, okay? The 4-hour algorithm makes you 213%. You win 52% of the time over the last 24 months. Your average win, 16%. It got you in here at 408. You're trading at 417 right now. So if you want to take emotion out of the trade and valuation out of the trade, just trade it on the 4-hour algorithm, and you get the 4-hour algorithm when you sign up for Trendspider. Use the top link on Linktree here. Save up to $1,500. Okay, just over $1,500 when you sign up for Trendspider. It's a good, again, any of these tiers, sign up for the year and you get my 4-hour algorithm. You get everything. I would urge you. The enhanced tier is far better than the standard. So if it's within your budget, get that one. But trade Tesla. Again, if you're worried about it, trade it on a small time frame. I actually like that one. Again, it is what it is. Earnings. We talked about earnings driving some of the most of the stock move. Netflix. I said it, and if we just go over to the newsletter, I was live yesterday on Substack. Download the Substack app. This is the earnings discussion that I had with people on there. And I put out this note. I said specifically they killed it on subscriber count. As of writing this, it's up 15% after hours. I think that was up like 920, 940. I said it'll reach $1,000 a share. Tune in tomorrow morning at 8:30. Okay, where is it right now? Let's go and look at Netflix. Netflix is at $1,001.50. We can look at the after hours and we can look at a 5-minute chart of this one. See, it got up and we're just holding. I would expect, again, do not buy this one at open. If you're not into this one, give it 3 days. Just give it 3 days. Because I would expect this one to come back probably to just below $900. That's where I would expect it to come back to. But they gave such good guidance. And here's the thing. User growth, it was crazy. They were expected to add 8 million subscribers. They added 18 million. There was the Tyson Paul event. There was the NFL games. And then there was WWF going on live on WWE, on Netflix. There's margins. The company continues to increase their margins. Monetization, they are raising prices. This is a good stock. There will be Wall Street analysts that come in and start raising their price. Their average price target is $970. Okay? They will start raising it. Absolutely, they will start raising it. The valuation makes no sense whatsoever when you look at it right now, but the PEG ratio going forward, 1.67, it's under 2. I would argue this is the one you want to own in streaming, but you want to own it at a lower price. So wait a few days. Again, if you just look at this, we are at all-time highs. And if you look at the weekly, I was screaming about this one when it was down here at 300. Buy it. It's worth it. They aren't going to lose. This is a good management team. It's a bit stretched here on the weekly. So I just say hold off. But it was such a good quarter. So go and do your research. Go and read the virtual analyst report. Another earnings that killed it. United Airlines. This was a top quant rated stock. So if we just go and look at United Airlines here, it just became a hold today. Or yesterday. Yeah, today. Just became a hold. And the reason? Because the stock is up 5%. When you go and look at Wall Street, they think it's worth $123. But the growth, when you look at it, EBITDA growth, it's an airline. These won't stay up there forever. They have pricing power. I like United Airlines. The story on United Airlines is really good. 2024 was a strong year across the board as we become the leading global airline as we enter 2025 with demand trends continuing to accelerate. You can't get on a freaking plane without paying $400. It's just it. I mean, that's just it. And earnings are driving it. You can see Delta Airlines, all the others were up in sympathy. You can see SkyWest is up there, up above it. Delta Airlines, if I had to own one, it'd probably be this one. But Wall Street says it's worth $79. You're trading at $68. And I think they already had earnings. Let's go look at the Delta Airlines. The actual chart on this. And again, you couldn't get on an airline. And in August, when you couldn't get on an airline, were you buying at 39? It's common sense investing that if you're flying, and I don't fly a lot, but if you're flying and you have trouble at the airline, and again, I had trouble with Delta in October. In October, when I flew up to Pittsburgh for the Monday Night Football game, I had trouble. It was trading at 55. They were nice about it. It was TSA's fault, but TSA was overwhelmed. I should have bought every freaking airline the second I walked out of that airport. Every single freaking airline I should have bought when I walked out of that airport. So again, that's common sense investing. That's like if you've got, if you go to Dairy Queen and they say, you know what? There's a supply shortage. It's going to cost you, $50 for this ice cream cone. Go and buy freaking, go and buy Dairy Queen. Because $50, people will pay it. Same thing. Don't forget financials. Capital One reports strong Q4 earnings helped by low credit loss provisions. The economy is getting better. The consumer is still strong. Things are still good. Capital One has a strong buy in the quant. Let's go and look at the chart. COF. Okay. COF is one. It's mainly credit cards. It is up 0.36. It's at 193. Look at that move up there. Okay. The 4-hour algorithm makes you 73.7%. If you bought and held, you made 88%. It's still a good return. And they just had let's go and look at what Wall Street says that it's worth. They say it's worth 209, trading at 194. That's 8% upside. There are probably better ones, but the quant thinks this one's a good one. The growth is a problem. It's not great. Revisions, they're bringing it down. But again, they beat earnings. So you don't have a catalyst until next earnings. Maybe you get that 8%. And here, heading into next week's earnings with big tech, top-seeking alpha quant picks in technology ahead of Q4 earnings. And if you just want to get technology, it's XLK. XLK is a buy in the quant. Momentum, B. Expenses, A. Dividend, A-, risk, C+. Because when you go to their holdings, it's risky. Apple's number one. We know that Apple's not doing good. NVIDIA's number two. Microsoft. But when you look at this one and you look at XLK, let's just take it and let's look at Apple. Let's look at it against Apple, its largest holdings. We'll take the S&P out and we'll just look at XLK versus Apple. Look at Apple coming down. And we'll look at year to date. XLK is up 1%. Apple's down 11%. Okay? Even over 6 months, XLK is up 4%. Apple's down 0.49. So if you want to protect your exposure, again, those spider sectors are really good. And I like them. In fact, those are, there's two of them. If you go over to my newsletter, go to the Daily Stock Pick newsletter, and you go to, let's go to the paid ones, because this one, the portfolio, the second one here, Daily Stock Pick 2025 portfolio. I have two sectors in there. Two of those spider sectors are in that. It's a 10 stock portfolio. So go and look at that one. Again, I got some kudos on Facebook about that portfolio. It's good. And XLK is one that's in there. So Butch, social request from Facebook. AMD, support off the weekly 200 AM. Butch is a technical guy. He looks at more technicals, seems to post charts. Trump revoked the AI executive order that was signed off by Biden, which restricted the regulated AI innovation. $500 billion in AI investments announced could be bullish for AMD, with potentially increasing demand for GPUs in the AI interface market, predicted to grow significantly over the coming years. Meta has already integrated AMD into their platform, could be a tailwind to break above. However, recent downgrades are more expensive than their rivals. Thoughts, Gary? Here's AMD's chart. And I will point out that the algorithm gets you in here a bunch of times and loses. The algorithm won't make you money on a losing stock. And we can go there back to when it hit this all-time high. That didn't provide for support. You're right at the 200-day. Is it a good buy? I don't know. I mean, the MACD is super low. It's super oversold. But when you go and look at the valuation, again, remember, this valuation is a big thing. It is still expensive. It's not super expensive, but their PEG ratio 0.82, it might hold a very good opportunity. But you don't want to ignore the most important thing in the market, which is momentum. 3 months, you're down 22%. 6 months, you're down 23%. 9 months, you're down 21%. This is during a time of a bull market in AI. Why is this down? The reason is because you can't change easily out of NVIDIA chips, which are the number one, into AMD. So AMD has to find their mojo, their magic, and it's not in AI. And you can say that, yeah, Meta's integrating AMD into their process. Yeah, but Meta's also developing their own chip with Broadcom and CRVO, Credio. And look at that momentum. So I'm not an expert in chips. I'm not an expert in AI. I'm not an expert in this stuff. But I do think that AMD, you're seeing the price targets start to come down. When those start to come down and the stock is still going down, that's a danger sign to me. Now, does it mean you shouldn't trade this? No. But for me, a long-term investment is NVIDIA. I just feel like NVIDIA has the momentum for 1 to 2 years. Doesn't mean AMD can't catch up, but they're just not. This could be Intel. You take a look at Intel. Intel was the number one, and everybody kept saying Intel's going to come back. Intel's coming back. Look at Intel. This is from 60 down to 20, and AMD could be an Intel. Doesn't mean you can't trade it, but I don't want to buy a falling knife. And so, Butch, for me, I mean, it depends on if you're in a data center and they're putting in AMD, and then you see it perform as well as NVIDIA, and you say, well, and the management says we're just going to go with AMD because it's cheaper. We can get them cheaper. And there's no supply chain issues because remember, NVIDIA sold out for the entire year this year of Blackwell chips. The entire year they're sold out. They can name their price and people will pay it. AMD can't. Intel can't. So, and the lead times on these things are huge. So I just don't see AMD. Everybody's wacky about AMD because of its, huge fall. I just don't. I'd rather buy the stock at, AMD. Where is it trading? Let's see. AMD. I'd rather buy the stock at 160 and have it go to 170 than to buy it at 120 and have it go back to 100. 100 isn't out of the realm of possibility. The last time that it was trading around 100 was just October of 2023. So don't think that this one can't go below its 200 day. It hasn't in recent history. I mean, look at 2014, 2015. Look at how low it was below there. This whole sector, SMH, has just been a beaten down sector. And part of that is because NVIDIA has been trading sideways. And AMD is trading so far down. And if you go and look at SMH, we'll just go and look at SMH, the holdings of SMH. It's NVIDIA, it's Taiwan Semi, it's Broadcom, it's ASML, it's Applied Materials. Advanced Micro is way down the list. And this one's been trading sideways, but AMD has been trading down. So for me, I just want to own NVIDIA, and I'd rather own an ETF rather than try and time NVIDIA or AMD. So scans here, entries into the 4-hour algorithm. First one in the core portfolio is Disney. I think that this one's $120 stock. They do have earnings coming up. Looks like a week from now, a couple of weeks from now, February 4th. 109 is the entry. It got you in here at 118. Now, here's the thing. The 4-hour algorithm over the last 24 months, 30 positions makes you 20% versus buying and holding has made you 13%. So it beats it. So again, this gap fill was way down here in the 80s when I said, hey, this gap is going to get filled. It did. It did. Now I think it's going to go to that 120. And I think Disney is going to announce something on their earnings that's going to move it up. But I would argue you want to be aware of this previous resistance line. See how it resisted right there? See how it resisted right there? It broke through it. That might be your new support. So 109, again, if you get down to 103, it looks like it's right at about 103, 104 at the time of earnings. You can see on this weekly chart, the MACD's turning over. I'm not saying that 109 is a bad price for it, but I do think we get some hype up to 120. Again, the consumer's good. Go and try and take a vacation at Disney. I mean, it's going to cost you $5-10 grand. So That's one. Dell with Project Starlight. Dell and SMCI both have entries in the algorithm. 111. I think this one could get back to the 170s. Again, what are they? There's Dell and there's SMCI and there's HPQ, which make the racks for data centers. Guess who's buying a ton of shit for Project Starlight? It's these hyperscalers, and it's everybody. And there's a gap here that needs to be filled to 140. I've added to this one several times. I think my average purchase price is around 113 or so. You trade it at 116. SMCI got taken out of the core portfolio, and SMCI right here, it's a buy at 32. Is it a buy? I don't know. I mean, nobody knows the financials of this company, but if they do continue with the NASDAQ, you can expect a bump. But I'd rather own Dell, which still has significant upside, than to try and time this one. On a weekly, this one still hasn't reached the 200-day of $24. It did break down there in November, but again, that it's just so outstretched because you can't trust it. There's a couple of other ones. You'll get them in the newsletter. If you have any questions, again, Linktree has everything that you need for this podcast. It has Cash App. If you want to tip me and say thank you for all your work, great. If you want to just support the podcast, again, the newsletter has a paid portion, which I provide additional services for everybody. Go and check that out. Get Webull. I have a Webull account. I took $1,000. It's now $12,000, probably, $12,200 or so. It depends on the day. I'll tell you right now. Let's see. Let's go look at our Webull account, because this one we are at $12,056. I'm down 0.38%. And the loss is mainly in Tesla, and it's MSTX and IBIT, which are two, MSTX and IBIT are fairly large. The two largest positions in here are NVIDIA and IBIT. IBIT is over 50% of this position. It's $5,300 right now. So again, I'm a believer that Bitcoin is going to pop. It is what it is. But again, join Webull, Alpha Picks, Seeking Alpha Premium, the bundle, or Trendspider. It's all there on Linktree. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.